Hey everyone, Dan here. It is Thursday, July 1st. Today we're going to take a look at BlackBerry. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to comment below with your thoughts, opinions, ideas, tickers you'd like me to cover. I look at them every night, though it may take me a few days to get back. Alright, so BlackBerry right now has fallen through all of the previous levels that we had in the chart. Basically it was in this down channel, broke out. I had basically warned about this double triple topping here. That happened. It fell through all of these potential bounce zones in purple that we were looking at, and is now resting about $12. There are a couple of really important levels here. This level around 12.15-ish, right about there. You see the previous support and resistance, pretty recent past, support here, resistance here, but then if you scroll back, you see also that support here and confirmed there, and resistance double topping out there before it broke through and got support. So 12.15 is pretty important, as is close to where it is now, this like 11.29-ish area, maybe 11.30. Let's call it 11.35. With this resistance, this support, resistance before there, and then down a little further, if it needs an additional catch zone down below, I would look right about here, 10.12. So those are the support zones to the downside that I'd be looking at. To the upside, I think this chart is relatively still intact. There does seem to be another zone that's developed around 13.50. So I'd pay attention to that as well, but obviously it has a long way to go if it's going to start to recover. And also it needs to break out of this obvious downtrend that it's been in for a while. Call it about right there. So if it can establish some support and even move sideways for a little bit, it could work itself out from underneath that downtrend line. But right now it's got a lot of work to do. Let's take a quick look at the indicators before we flip over to the data. So RSI, as you would imagine, pretty low. Tracking the price action pretty consistently. It's sort of a mirror image of the price action, so not a bunch of divergence happening there. MACD relatively flattening out, so giving itself plenty of space to, for a big move up or down. So I would look for it to just sort of like make a strong crossover one direction or the other, but it's sitting right at the baseline, so it gives it plenty of opportunity to move strongly in one direction or another. It is still well under the MA200. I was wondering if these MAs would actually be bunched up a little bit more tightly, sort of like the MACD was, but it's not. And actually the final bearish crossover, the 20 crossing below the 50, just happened basically yesterday. So it definitely needs to start curling back up to help provide some support and push it out from underneath this downtrend if we want to reverse course here. But yeah, it's been quite a downturn for BlackBerry. Let's flip over to the data and see what's going on. I know there's been a lot of speculation on short situations with short sellers and stuff like that. Before we go through this data, this is the newest data on BlackBerry. I will just mention a couple of other things. One, there's a link in the description below for a newsletter. If you'd like to receive a once or twice a week email from me with some additional trade ideas, some setups, some sort of like follow-ups on videos that have been made, that I have made. I'm going to be rolling that out in like a month or two. I'm waiting until we get 100 folks on the list signed up, and then I'll start to like put it together, and that'll probably take me a month to do. So nothing super imminent, but if that's interesting to you, drop your email in the Google form that's linked below. And then also there's a couple of broker links that you can use down there if you're looking for some free brokers to use. Gatsby is really good for a quick, super modern UI UX, very mobile friendly app. Great execution times. I really enjoy using them. Webull is the charting software that I use. So if you're looking for full charting software plus a free broker, they're a great option as well. To me, I use both because I'm subject to PDT, so it helps me have additional day trades available to me. Plus, if a broker goes down, it's always good to have opportunity to trade elsewhere while that one gets itself, situated. All right, so the new data that we have on BlackBerry is the second half of the second half of June fails to deliver. So we're going to take a look at that today, and just to sort of like give you some background, if you're not familiar, we're going to focus mainly on this situation here. So fail to deliver positions are basically when you pay for a share of a stock. There's this like 2-day settlement window where your money goes to the person who sold it to you, and you're supposed to then receive the share, right? This appears to happen instantaneously, like through your broker, but actually what's happening in the background is this exchange that happens over the course of a couple of days. A fail to deliver that we're going to talk about today, a short fail to deliver, is when you pay the money, so the money's gone from your accounts, you receive a share, but then within those 2 days, your broker doesn't actually receive the share. The person who sold it to you or the broker that sold it to you is basically saying, we can't find it right now, there's some issue. So hold on, we're going to try to reconcile it, but right now we're going to technically mark your share as an IOU because we know that you paid for it, so we know that you're owed the share, but we can't actually transfer it to you at the moment. So until we reconcile it, it's going to be an IOU. So a bunch of folks holding IOUs that don't even know it, and over time those typically get settled in the background. But just know that in the meantime, there's a bunch of these IOUs floating around because I could then sell that before it's ever delivered to me. And then that IOU is now in the hands of someone else. And so this is a way in which it can appear as though there's more shares or more supply in a stock than there truly is, which can, of course, drive the price of the stock down because something that looks like it has a bunch of supply is typically driven cheaper. So fail to deliver. So then basically the person who or the broker who has not delivered those shares have time frames in which they are supposed to provide that to the buyer. So fail to deliver positions related to sales pursuant to Rule 144 and 36 usually close out T plus 39. So this is 39 days after the trade. Now, an aged fail is considered anything that has not been settled in 30 days. With an aged fail comes specific charges by the SEC to cover counterparty risk. So there's, fees and fines and things like that that come along if you're unable to stick to your delivery schedule and locate and deliver your shares after 30 days after the trade. So what we're looking at here is the fails to deliver data reported for BlackBerry. And we see here the most recent dates. The most recent one is June 13th. That's 827,692. May 31st, 936,242. So, these aren't super high numbers. You see back here, there's super high numbers, like on September 25th, 3,319,000. And then here, I don't know what happened on this date, but, that was way back in 2015, so who knows. But this is the historical data. So as you see, like a pretty small percent of fails to deliver. Now, fails to deliver can happen for a bunch of legitimate reasons. They can also be a sign of naked shorting. So that's why I like to keep an eye out for them and pay extra attention. So let's look at the fails to deliver, but let's also look at the short data while we're here on Ortex. So exchange reported short interest on the upper left here has gone down about 20%. Estimated short interest percent of the free float currently at 6.6, so it's a relatively small percent. I don't usually tend to pay attention to those things until it's over 10, and even these days probably closer to or over 20. Percent of the free float on loan, 5%. So these are very small numbers. The utilization rate, the number of shares available to borrow that are currently being utilized is just 20%. So these are small numbers, relatively speaking, that wouldn't lend one to expect that there's something like a short squeeze that could occur here. And also, the short interest hasn't gotten that high in recent past. You see this blue line here is the exchange reported short interest. So, it's not, to me, a big factor of why this downtrend has happened. I actually think this was like a hype, and then hype died off. Folks started to shuffle around elsewhere. That's sort of like a tension, and the hype went into other stocks, and so it just sort of like lost all of that extensive buying power. And so when that happens, obviously sell-offs can ensue as folks are trying to position their capital elsewhere. Even if we look at today, Ortex's estimated current short interest percentage of the free float just over 6.5%. So very low numbers. But what I wanted to look at here was this this fails to deliver that we were just talking about. So let's look at June. What are my dates here? Let's look at June. What I want is, what I want is June, the end. I keep forgetting what the date is. Beginning of June to current. Not sure why I'm struggling with this so much. It's April, May. Okay, end of May. Then let's go to today. Okay, let me just back this up quite a bit. All right, so here we have the short interest coming through, and you see it coming down. This is on May 14th, and you see it coming down here, and this next goalpost is May 28th, and then you see it all the way down here as of June 11th. And so, it does continue to come down quite a bit. June 15th down here. That said, the fails to deliver, which are these yellow bars here, there have been some peaks coming here, but again, they aren't in the millions, and so to me, that's not really going to play a huge factor in the potential. Like what you look for is if there's well over 1 million fails to deliver, and then a bunch of those are sort of like because folks didn't have a share to sell, but they sold it anyway, and then they're having to go on the open markets and buy it up and then deliver it to that person. What you look for then is a big bump in the share price because there's all this buying pressure coming in to consume shares to then deliver from old transactions. But here, to me, this doesn't look like it's something that's really going to play a factor. And so I don't think that the volume is high enough, to be honest, to really warrant something like that playing out. So, I really kind of think that BlackBerry is basically a byproduct at the moment of, just losing hype. I don't think that there's like a bunch of shorts coming in and doing stuff. I don't think that the failures to deliver are like really outsized. They're actually relatively small to stocks in which we see an issue with the fails to deliver. Thinking about like SoFi, AMC, GameStop, things like that. So yeah, but I mean, good luck if you're in BlackBerry. I would look for these, lower bounce zones for the time being, to try to catch them. 11.35, 10.12. If you really believe in the stock, then you might want to look for signs of price strength at those dip points if you're looking for positions. All right, well, I hope your trading day goes well and that you finish off the week strong, and I will see you in the next video.